Hey everyone, welcome back to the channel and thanks so much for clicking on this video. If you've been following my content, you know that I'm absolutely obsessed with finding deep value opportunities in emerging technology sectors. Today, I want to share something that might seem crazy at first glance, but I genuinely believe represents one of the most compelling risk-reward setups in the entire stock market right now. I've been researching the artificial intelligence sector extensively, and I've uncovered three absolutely remarkable opportunities that are all trading under $1 per share. Now, before you dismiss this as penny stock gambling, hear me out completely. These aren't scams or shells. These are legitimate companies trading on major exchanges with real AI technology, real products, and real commercial traction. The reason they're trading at these ultra depressed valuations has nothing to do with the fundamental potential of their AI solutions and everything to do with market conditions, extreme investor pessimism, and the fact that sub-dollar AI stocks often get completely overlooked by sophisticated investors. Today, I'm going to break down each of these three companies, explain what makes their AI technology valuable, and most importantly, explain why I believe they represent the kind of deep value opportunities that could potentially deliver life changing returns. So stick with me as we explore three under $1 AI opportunities that could absolutely transform your investment portfolio. Let me start by explaining why ultra cheap AI stocks trading under $1 represent such compelling opportunities right now. When stocks fall to sub-dollar levels, several things happen simultaneously. First, retail investor interest often disappears because brokers sometimes restrict penny stocks or people assume they're worthless. Second, institutional investors often ignore them due to index exclusion or minimum price requirements. Third, the extreme pessimism means any positive developments can trigger explosive revaluations. The thing about artificial intelligence is that the underlying technology doesn't care about the stock price. A company developing breakthrough AI solutions at 50 cents per share is doing the exact same thing as a company trading at $50 per share. The only difference is valuation and market perception. The three companies I'm about to share all have legitimate AI applications, real revenue or commercial deployment, and genuine catalysts that could drive dramatic revaluation. What makes them particularly interesting is that at current depressed levels, even modest improvements in execution or market conditions could result in 10 to 1, 20 to 1, or even 50 to 1 returns from these levels. Our first opportunity is an integrated security solutions provider specializing in secured logistics and robotics with significant AI integration. Trading at approximately $1.20 per share, this company has experienced a dramatic decline from a 52-week high of $3.80. The company reported 2024 full-year revenue of $36.35 million and reduced losses to $5.86 million, representing 80% improvement in losses year over year. That's meaningful progress toward profitability. Most importantly, gross profit increased 16.1% in 2024 compared to 2023, demonstrating improving unit economics. The company is advancing a proprietary multi-agent AI platform integrating artificial intelligence, robotics, and smart solutions for sector-specific applications. The company announced it's accelerating AI agent commercialization with robotic integration in Thailand and launched DVGO Beta 2.0, bringing AI agents into real-world applications. The company also secured a long-term contract with the government savings bank, demonstrating real customer validation. Analysts have assigned strong buy ratings with price targets around $4.50, representing approximately 375% potential upside from current levels. For investors who understand that security and logistics is a massive market and that AI-powered robotics solutions are the future of that industry, this company at current valuations represents extraordinary value. The company is simultaneously growing revenue, reducing losses, and commercializing breakthrough AI technology. Our second opportunity is an AI technology company developing a distributed supercomputer infrastructure platform designed for AI software development and intensive computing applications. Trading at approximately 28 cents per share, this company has experienced wild volatility with a 52-week high of 84 cents. The company recently announced a joint venture with SG Austria in a move that suggests significant strategic partnerships are being developed. The company specializes in creating and developing advanced AI technologies and provides information technology consulting services. The company's distributed supercomputer is designed for AI software development companies and companies requiring enormous computing power for scientific simulations, climate modeling, protein folding analysis, and big data processing. Think about what that represents. As AI becomes increasingly resource intensive, the need for specialized computing infrastructure becomes critical. Companies need access to powerful computing resources without massive capital expenditures. This company is providing that as a service. The market cap, at current levels, is only about $44 million, suggesting minimal market recognition of the potential opportunity. The company is positioning itself in an emerging infrastructure market that could become increasingly important as AI adoption accelerates globally. For investors who believe in AI infrastructure plays and see value in a company with minimal valuation operating in a growth market, this represents a speculative but potentially rewarding opportunity. Our third opportunity is an AI-powered real estate technology company developing an end-to-end home buying platform with AI-driven tools. Trading at approximately 51 cents per share, this company has experienced recent strength with a 52-week low of 14 cents and high of $4.49. The stock's recent recovery suggests the market is recognizing value at these depressed levels. The company recently reported 326% revenue increase and announced the completion of integrating Namche, its subsidiary with over 30 AI engineers and developers. Most impressively, the company announced Q1 2025 revenue of 4,432% year-over-year growth. That's not 1,000%, that's tens of thousands of percent revenue growth. The company launched Re-Alpha Mortgage, licensed in 31 states, and is rapidly expanding nationally. The company's AI-powered Claire Assistant and AI Loan Officer Assistant achieve up to 99% accuracy in document processing. The company just acquired Prevu to expand its multi-state footprint and integrate additional AI capabilities. Management appointed Mike Logazzo as CEO to accelerate growth. Most critically, H.C. Wainwright initiated coverage with a buy rating, suggesting institutional recognition is beginning. The company regained NASDAQ compliance after reaching minimum market value requirements. For investors who believe in prop tech and AI-powered real estate solutions and see massive runway for a company trading at depressed valuations with exponential revenue growth, this represents a compelling opportunity. What ties all three of these sub-dollar AI opportunities together is that they represent companies at inflection points in their commercialization, but trading at valuations that reflect maximum pessimism. The security robotics company is commercializing AI solutions while reducing losses. The distributed computing company is positioning itself in emerging infrastructure. The real estate tech company is achieving explosive revenue growth and expanding nationally. In each case, if the market recognizes the value or the companies execute their strategies, the upside potential from these depressed levels could be extraordinary. However, I absolutely must address the severe risks involved because these are genuinely speculative investments. Sub-dollar stocks are inherently risky. The security company is still unprofitable and could face slower than expected commercialization. The distributed computing company is pre-revenue and dependent on forming strategic partnerships. The real estate company is burning cash and faces intense competition. All three stocks could decline further. You could absolutely lose your entire investment. These are not for conservative investors. These are for investors willing to accept significant volatility and risk for the potential of meaningful appreciation. Position sizing is absolutely critical. Never allocate more than a small percentage of your portfolio to any single sub-dollar stock. These should represent only the most opportunistic, highest conviction positions. Do extensive research, understand the technology, read SEC filings, understand competitive dynamics. Don't invest based on my recommendation. Use this as a starting point for your own investigation. Have ironclad discipline around entry and exit points. Know exactly when you'll take profits and when you'll cut losses. If this analysis interests you and you want to explore further, I encourage you to research these companies thoroughly. Dive into the SEC filings, understand the AI technology, form your own independent conclusions. I would love to hear your thoughts in the comments. Do you think any of these sub-dollar AI companies represent opportunities? Let me know. If you found this valuable, please smash that like button and subscribe. It helps tremendously. Thanks for watching. Remember, the best investment is always the one you understand completely. Do your research, invest with extreme discipline, and never risk money you can't afford to lose. I'll see you in the next video.